number A was saying, citing 4 reasons. Justify why not-for-profit entities should be subjected to regulation. Justify why not-for-profit entities should be subjected to regulation. What do you think are the reasons? 2022. Why not-for-profit making organization should be subjected to regulations. What do you think are the reasons? Why not-for-profit making organization should be subjected to regulations? Someone? Yes? Okay, we can talk about corruption or talk about for accountability. Yeah, for accountability. Accountability purposes. Yeah, that's one of the reasons for accountability purposes. So for them to be accountable, they must be subjected to a regulation. And number 2, for uniformity. Uniformity in reporting. Uniformity in reporting. Because there are several of them. For them to be uniform so that you can be able to do comparability of their statement, then you need to have regulations. Remember, this is not for profit. We say it includes the clubs. Yeah, it includes the schools, education, institution, NGOs. Yeah, those are the not-for-profit making organization. What else? Do you think is the reason why we need to subject them to regulation? For control. Control purposes. That government can be able to control their affairs, control their activities. Because others are hiding beyond or within this particular not-for-profit, but when they are not for profit. Yeah, they are registering an organization as not-for-profit and they use it as an avenue for other activity. So for control purposes, then we need to have regulation in place. And the other one, why do you think we need to have regulation? Apart from the 3, we needed 4. 4 reasons. 4 reasons. We shall talk about 2 for protection. Protection of the public. Protection of public against abuse. Of these institutions. Against abuse of these organizations. So we protect the public. Yeah, because nowadays we find that you can be running an organization and you run a campaign for fundraising. Dr. Mtu mzee anachukua picha kwa nyumba ni kazee natafuta fundraising ule unampa 20,000 anaenda shughuli zake. Yeah, public contributed almost 800,000 for the benefit of the lady, but you swindle all the other money. So if there is no regulation that is controlling against that, so that some vices can be controlled, then the public will be exposed to this particular false organization and entities, and they will be abused, contributing their money for no any reason or for no any purpose. Yeah. Nowadays we find that even celebrities or musicians, wakati walikuwa na pesa wanaharibu pesa zao, baadaye anaweka pay bill tumsaidie. That is abuse. You part B. And B of that. BP Traders financial year ends on that first March. On April 2021, BP Traders had a balance on planned account of 334,800,000 and an accumulated depreciation of plant of 184,860,000. BP trader policy is to provide depreciation using a reducing balance method applied to the non-current assets held at the end of the financial year at the rate of 20% per annum. Depreciation charge is not prorated. So prorated is whereby we are taking the duration. On 1st September 2021, the company sold 12,330,000 a plant sold for 12,330,000 a plant which had acquired on that 1st October 2018 at a cost of 32,400. Additionally, installation cost totaled 3.6. During the year ended at 1st March 2020, major repair costing 5670 had been carried out on this plant. A new motor was fitted on the plant on 12 December 2020 at a cost of 3960. Further, repair costing 2430 were carried out during the year ended at 1st March 2021. So the company acquired a replacement plant on 30th November 2021 at a cost of 8640, inclusive of installation charge of 6.3. So required plant account number 2, accumulated depreciation on plant account, and profit or loss on the disposal. This one is an accounting for PPE. Yeah, and accounting for PPE. Accounting for PPE, property, plant, and equipment. In the first one, we need the plant account. This is an asset account. Plant account, we had a balance of what? At the beginning? Yeah, 3 that 4, 800. You can put shillings in thousand. 3 that 4, 800. And I will open accumulated here. Accumulated depreciation. Accumulated depreciation, we had a balance of? Yeah, 184,860. We are told note number, that paragraph, on 1st September 2021, the company sold for 12,330 plant, which it had acquired on October 2018 at a cost of what? 32,400. Additional installation cost total what? 3.6. During the year that 1st March, major repair costing 56 had been carried out, so that one will not count. The only item that will count, so a new motor was fitted on the plant on 12 December 2020 at a cost of 3960. Further repair costing 2430 were carried out. So we shall deal with the cost of these items that we disposed. Here, disposal. The motor vehicle had costed 32,400. Installation cost. Okay, so disposal, yeah, divide the two upper. The cost was 32,400. 2,400. We get an installation of 36. So that is capital. Installation is part of the capital expenditure. An installation of motor, new motor. That was not repaired. New motor costing what? 6960. Total. That will be the total cost of the motor vehicle or the plant that we sold. 9,960. All these are shillings in thousand. And the last paragraph, the company acquired a new replacement plant on that in November 2021 at a cost of 8640, inclusive of what? Installation charges. So new plant, or you just call it cash, that we paid 8640. That's all. Total. Is total. This is 343. 540. 440. 343, 440. So the balance cut down. 303, 48. Yeah.
So installation charges are extremely expensive.
So remember, and what? When you're looking at capital revenue, expenditure, capital revenue, expenditure. So under capital expenditure, this is expenditure that is used for the acquisition of asset or adding value, and it is a one-off expenditure. The revenue, it is a recurrent. When you look at installation, do we recur? It's only incurred once during the time of installation, and that's all. And you'll find that installation, we capitalize it because the machine or the plant cannot work before it is installed. So it forms part of the capital expenditure. So it's not a revenue expenditure. And that's why we are adding here, when we are disposing the cost, installation, and new motor vehicle, new motor that we purchased. This was not a repair. It was something new that we installed. So you've seen that? Yeah. So the others are revenue. Revenue. The major repairs. It doesn't matter whether it's minor or major, but still it is a repair that we are doing. Okay, so we come to this. The accumulated. They are telling us they calculated based on what? They are reducing. It is a reducing balance. The second paragraph. BP traders policies to provide depreciation using the reducing balance method applied to the non-current asset held at the end of the financial year at the rate of 20%. Yeah. So depreciation for the year, we shall calculate it in two ways. First, the asset that we had at the beginning, 334, 800 minus accumulated over 84, 860. 20% of that. Then you have this one that you purchased, or even that you get me. Yeah, this one now. Lost. Yes? How? Okay, so the depreciation, not in Mefuta, because we are not in lost. So the depreciation, they are saying, under the second line, the second paragraph, where they are saying depreciation charge is not prorated. In a month, in a month. Yeah. So they are using what you call the full year charge. And if it is a full year, and that's why they are saying, BP trader policies to provide depreciation using reducing balance applied to non-current assets held at the end of the financial year. At the end of the financial year, we had assets valued at what? 30? Yeah, for 80. With an accumulated of 184, 860. Which will give you what? By 20%. 20%. That will be the depreciation for that particular year. Then this side, disposal. The depreciation that we disposed, this item, the asset that we disposed. We had acquired it on. They said about that. So on 1st September, the third paragraph, on 1st September, the company sold for 12,300 a plan, which it had acquired on 1st October 2018 at a cost of that. Okay. So this one now, the disposal, we shall calculate it in two ways. The first item was 12,300. That's one of them is on max budget. 12,300, not 12. The cost, 32. Yeah, 32,400 plus the installation of 36. Yeah. So 20%. It is a reducing balance. Because how many years are those? 2018 to 2019. So our year is ending March. The first year we ended on 2019. March 2020 and when did we sell in 2021? It was September. Yeah. And 2021. So 2022 I took account because in ours April. Malo percent malo nisema market is not correlated. So we shall account for 3 years. So it has depreciated for 3 years. Using the reducing balance, how do you calculate that? So this is the initial. So we multiply by 1 minus 20%, 0.2 raised power what? For business maths, there is something you have said that net book value. It is net book value. Net book value is cost 1 minus R power T. So this one will give us the net book value after the third year, after 3 years. So that we shall minus to get. So to get depreciation here, it will be the cost minus what? Net book value. Yeah, wamechanganya wakati tumesema ni reducing balance. Lazima tutatafuta about the net book value, then we minus. Because it is for 3 years. So first, let me just do it as a working for the disposal. So our net book value therefore will be 32,400 plus 36. 1 minus 0.2 power 3 will give you what? This is the net book value. Power 32. So that's a depreciation of these two. When you add your button, 6,000 minus 18 for 32. 17,568. Then the other one that we acquired it on the motor. Yeah, December 2020. So the first year will end in March. So March 2021. Yeah, and because okay, March 2021. So 2022 we shall not count. We can make assumption that we assume. So this one now will be directly because it's only 1 year. So that is 3960. 20%. That's just 1 year for the motor. 2020, 2021. 7? 92. Total? No, hatuadi yote, tunaadi hizi mbili. Pia hatuadi. Remember this was the net book value. 25? No, you can it's not 18. 60. 60. Yeah, the disposal. 18, 60. The balance, carry down. And you add. The last one is the disposal. The disposal, profit or loss on disposal. Profit or loss on disposal. This is a disposal account. Disposal account. The cost. We saw it at 39, 960. The one that we saw there. This one, here that we can pick up a disposal. The double entry, we debit here. We had accumulated, or I started the disposal process. We sold it for what? Bullet 3, not bullet 3. The third, the second, yeah, that paragraph we sold it for 12. Which one? the motor here is going to depreciate 1 year. Hapa tulikuwa include. It is included here for 39,960. The only thing hapa to be separate because motor for 1 year. But this one ilikuwa acquired from 2018. That's the major reason we have separated. So the total cost was 39. Accumulated, these are disposal proceeds. We sold it for what? That paragraph? 12? 12, these are shillings in thousand. And we have accumulated depreciation. This value here, 18 there is 16. So balance, is it a gain or a loss? Seems to be a loss. Loss on disposal. So loss of what? 92. So one of the assumptions that we are making here, our assumption, because they have not said that, we have assumed that depreciation full year, they are providing full year depreciation charge, in the year of acquisition, and none in the year of disposal. So remember, there are normally 3 ways of charging depreciation: the full year charge, the proportionate charge, and the other one is normally what? No charge in the year of acquisition. In the year of acquisition, we don't charge. Depreciation starts in the 2nd year. Full year, even if we buy it for 1 day, we charge full year. And the other one is proportionate or pro rata. And here they are talking about it's not prorated. So it's not prorated, they are using this as our assumption. Let's get a question. Yenye tulidispose ni sio yenye tuliuza disposal ya credit in the planned account. Relate to paragraph 3. On September, the company sold for that a plant which they acquired on that 1st October 2018 at a cost of 32,400. Additionally, installation cost was 36. During the year, there was major repair. Major repair, we are not using it because that is revenue expenditure. Then a new motor was fitted on the plant on 12 December at a cost of 39,60. Further repair costing 32 were carried out during the year. So it's still the plant that they are referring to, the plant that is sold. I've seen that, Yeah. So that later they acquired a new plant, a new replacement on 30th November at a cost of 86, inclusive of installation charge. That's all. Somewhere. That's all.